I think there is certainly a lot of room for the bright people to come to the States and to drive America growth forward together with the domestic local talent in the U.S. I do think there is probably a need for some reform because initially.
Right.
The H-1B program was reserved for the really high value added students, but now I think it has changed quite a bit. So that's something we should look into. Yeah.
Charles, at American Century, how are you guys proceeding here with your fixed income portfolio here? We've got a Fed that looks to be cutting rates. It cut 25 basis points and seem to be committed to some more. Where in that backdrop do you guys see value these days?
Well, I think, if you rewind the clock a little bit and coming into this year, 10-year U.S. yield is about close to 5%. Right now it's sitting just a touch above 4%, right? And the credit spreads since the wides of early April have tightened so much. Now it's sitting around almost all-time tights for both investment grade and high yield. So I would say, yields in the U.S. market is probably fair, but the spreads are very tight. So I think the better opportunities are actually overseas.
Okay.
If you're willing to travel a bit overseas, you can get a New Zealand government bond.
Really?
Yes, for let's say 10 years and hedge back to U.S. Dollar, you can pick up 140 basis points for a AAA bond yielding somewhere like a 5.5. I think that's very attractive. Or you can go south, of the border. You buy Mexican bonos. And by the way, that is probably one of the best performing, fixed income instrument year to date.
Do you hedge that currency risk as well?
So you can play it two ways. If you bought it at the beginning of the year, you would have a return about 8%. But if you don't hedge it, as we all know, dollar has been weak.
Yep.
You can pick up another 7 to 8 points.
Wow. Yeah. How about the municipal bond market? I mean, on my Fridays we have a spot we always talk about the municipal bond market. I think the cash equivalent yields for so many investors are crazy attractive. How do you guys think about the municipal bond market?
Yeah, we actually do believe there are values in the muni market. As you recall, there is quite a bit of turmoil in the muni market. It has underperformed most of the fixed income markets year to date. Yeah. It only started to catch up a bit over the past few weeks. So, if you look at sort of the typical valuation metrics, like the muni to Treasury ratios, around the 10-year part of the curve, it's about a 70%. That's about a fair, but the back end it's about a 90, right? Mm-hmm. So you talk about tax-free yield, roughly you can get around a high 3s or 4%, and on the taxable equivalent basis,
right,
that's about a 6.5-ish.
In
so
your
very
world,
attractive.
in the stock market rather. I mean, it's a debate. Is there exuberance or not? I don't want to get into the debate. But FOMO, fear of missing out. Is there fear of missing out in the Charles Tan world? Is there sweat and agony about what to buy next in bills, notes, and bonds?
Yeah, we do see that in the bond market as well.
Where?
That's the reason why the credit spreads have been so tight. As you probably know, there has been a massive amount of annuity monies coming into our market. Through the insurance company, they find their ways eventually into the fixed income market, right? So, to me, there is a lot of a chase of a yield, chase of a spread. That's the reason why we are a little bit cautious on the credit market.
Right.